Spotify. Talked about this before. Spotify going through accumulation, distribution, accumulation, reaccumulation, more reaccumulation. We're much higher than we were before. I remember thinking, and this distribution I was talking to Max about, this was back when Joe Rogan was the main headliner for Spotify, and he ended up leaving from the platform, and we saw a huge distribution move to lower ends. But if you got into Spotify near the bottoms, right here it says went as low as about $69. Right now it's at 693. That's a 10xer, even a little bit more from the bottom at this point. So you guys can see how Wyckoff accumulation is a true pattern that if you guys understand and you can spot when they're really buying up, you guys can get in on these positions and make the money from the upward trend. What are we looking at? So reaccumulation, we've got this flag looking pattern. Is it a bull flag? Do we have a possibility of it shooting back up? The last 3 earnings were all misses, but as you can see, they do not necessarily mean that price is going to go down. So here in November of 2024, we saw a miss, but we actually saw it break up above the channel. Same with the one in January of this year, February of this year, we saw it pop up above, came back down. And here as well in May of this year, we saw, even though we saw a poor earnings report, it dropped and then recovered pretty quickly in just a couple of days. So remember, earnings does not have to dictate what direction price is going to go. A lot of times it's going to have to come down to what their forward guidance has to say. Tuesday before open, the PE ratio at 112.32. So we've got a very, very highly valued stock. A lot of times with this type of thing, it's because of their forward guidance, but it is definitely in the severely overvalued range when it comes to price to earnings. Already just showed you accumulation, distribution, accumulation, and 2 reaccumulations. We haven't exactly seen a buying climax. So is it possible that we could see higher? I do believe so. We do. And a lot of times with those sell-offs, we will see it accompanied with some sort of news. So maybe we'll see a pop and then a big sell-off that creates a selling climax and an automatic reaction, which creates a range for the price to trade out in. I would expect at this point too, we would very likely see some sort of distribution start to happen, especially because we are this high up on price. Oppenheimer just upgraded on Friday to an $800 target. Okay, so it's trading at about 690, another $110 higher. Which definitely would make that PE ratio just go up even higher. But keep in mind that part of it does not have to make sense right away, but in due time, it definitely will come back out and even itself out. Like I said, missed earnings the last 3 times, but popped higher on 2 of them and rallied higher on that last one. Stacks does show 2 unusual prints, one from 6.6 and the other from 7.22, both aiming above 800. Okay, and they're aiming for January of 2026 and March of 2026, with a total of 3.87 million spent on those 2 positions. There were some puts also sold today at 677, which may create a bit of a floor for us. Seems like Big Money has longer term expectations on this name to the upside. If subscriber growth continues to beat expectations, we would definitely see back above 708 very quickly. We got to check stack sentiment on Monday for additional prints. And so you guys can see Spotify, not all that much going on stacks, but again, the 2 unusual ones are Big Money here. So you can see the Big Money bags in the background, but the blue lines are always going to be a situation of unusualness. Okay, so it's the way we like to characterize it is it's aggressiveness. This is a very aggressive position for them to be taking, with high expectations in this situation for these calls to go to the upside. So honestly though, because Spotify is trading at that almost $700 level, a lot of these options are going to be fairly expensive. As tempting as it might be that, hey, we might be seeing higher for Spotify, I plead with you, don't aim for extreme out the money short-term expirations, because those are most likely going to get IV crushed, because we will not see it head in the money. So be careful with that. Just because you see a cheap option play generally means it's cheap for a reason. Okay, you want quality in this situation for a name like this. And with these positions, yeah, I definitely think Spotify could very well be poised to head a little bit higher after this earnings report. But we do have quite a bit of a run up, so a sell off, if they do have some sort of miss, is going to be a situation that I would definitely expect. But above 700, if we can get that beat, otherwise we're going to probably see it head back toward that 670 range. 677 is what this put is saying for Friday. Let's see what Max has to say about Spotify.
All right. So Spotify is an interesting one. Revenue, we're expecting 5 billion, 21% up on the year. EPS at 232, 61% year over year. Premium subs, 288 million. That's up 41% year over year. And monthly active users, we're looking at 736 million, which is up 51%. So with those year over year numbers, we can definitely see why this thing is trading at the PE ratio it has. Now, there is more to this than just revenue, monetization risks, and ad strategy. Why investors are laser focused on margins, analyst upgrades, but bearish earning models, and whether Spot is still a buy at 680 plus. Because, as Eric said, valuation sky high, and that is a dangerous world to live in. So it looks like it's still riding the wave after hitting a record high of 785 in June. Even after a post-hype dip, it's up 100% on the year. Bulls are betting big on monetizing free users, AI-driven discovery tools, and new features like Superfan tier. But bears are circling too, citing a high PE, a mixed earnings beat history, and tougher competition from Apple Music and Amazon Prime. So the question heading into Tuesday, can Spot keep the growth party going? So what are we going to be watching? Three things. User growth. That is still their hero, their bread and butter. 736 million monthly active users, again, 51%. Premium subs, 288. Ad-supported growth is massive at 58% year over year estimated. Monetization is the wild card, though. Analysts are watching whether Spot can increase ad revenue per user. New Superfan tier and pricing tweaks could be teased in guidance. We're also seeing AI-enhanced personalization, which is going to give them a potential long-term edge here. AI DJ, AI playlist curation, and Gen AI tools have driven retention. The key question, though, can Spotify monetize the engagement bump? Now, why does this matter? Spotify is trying to become the audio platform for the next decade here, and this report could set the tone for the rest of 2025. It's also the most richly valued of all major music streamers. Any misstep on margins, FX headwinds, or ad revenue could trigger a correction here. Analysts at KeyBank and Oppenheimer, as Eric mentioned, both upgraded the stock ahead of its earnings as well. But Zach sees a risk, which Zach's ranking is like this earnings thing that I read all the time, by the way, for context. They see a risk of a miss of ESP down 9.1%. So that's not a great sign. But again, it seems like one of the themes we're going to be seeing: too far, too fast. Like some of these companies are just aggressively growing too fast in such a short amount of time that it's going to make people nervous. We just talked about that with SoFi. Again, Spotify is trading at an insane PE ratio ahead of earnings, while competitors like Apple and Amazon treat music as a loss leader. If Spot misses Tuesday or guides light, this hot streak could hit pause fast. Now, four things we're going to be watching: AI monetization roadmap, subscription price strategy, expansion into Asian and LATAM, and margin trajectory post Q2. Those are really the only things that are going to boil down for Spotify, because they may be looking profitable, but if those margins do not play out for their Q2 projections, then it's not, that will be their killer probably. So, but yeah, that's what we got for Spotify.
Yeah, very good. Yeah, like I said, risk is more so to the downside on this one. If we see a major subscription beat, that could be what pushes it up. I kind of like to think about how Netflix as well. Netflix kept on showing a lot of beats in terms of their subscriber base, which has pushed them up very high. But again, it's gone up very, very quickly in a very short time. So again, the risk is going to be to the downside. Keep an eye out for what shows up in stacks on Monday and just Monday, because it is Tuesday before open. See if there's anything else that shows up, especially because on this name we don't see too much activity. But if they are going to be willing to spend those millions of dollars on these positions, keep in mind they're not trying to lose their money, so understand that.